I'm really excited to be with you this morning and really share the success that our wealth teams had since we were last here together. I think we've made a lot of progress as a team. I think we're well positioned for growth going forward and really have some true momentum as we head into this next strategic plan. So over the course of the presentation, I'll remind you briefly where we've been, talk a little bit about really what is wealth at Regions, and then talk about the opportunities we have in the next 3 years. But the key takeaways this morning, if you walk away with just 3 things, is that to profitably grow, we're going to leverage the uniqueness of our business model and the deep expertise of our wealth bankers. As John Turner touched on, we're going to utilize the partnerships we have within corporate and consumer to help deepen existing client relationships, bring in new ones, and grow our markets. And then finally, we've made some investments over the last 3 years. So we're going to focus on execution and really capitalize on the investments that we've made. So here's a quick overview of wealth. It's roughly $500 million in revenue, and we break it up into really a couple of different groups. One is our private wealth group, which handles the needs of affluent families and individuals. We have our institutional services team, which meets the wealth needs of corporations and endowments and foundations. It's supported by our asset management team. And then we have our investment group, which are 270 financial advisors that work in our branches with Scott Peters' consumer team. I will say we've operated for the last 100+ years with a fiduciary standard of care. We think that's a strength for us. And we're a little bit different than the rest of the bank in that the majority of our revenue is in the form of fee revenue, as you'll see on the slide. Results since our last Investor Day, I think, are strong. You look at non-interest income, which is up 19%. Our profitability is up almost 50%, and our efficiency ratio has improved 430 basis points over the time period. So what's the wealth business at Regions? You've seen a similar slide in the earlier presentations, and we really look at our core markets as 6 markets: Alabama, Mississippi, Louisiana, Arkansas, Tennessee, and Florida. And 75% of the revenue comes from those 3 markets. And the growth opportunities are really around the edges. If you look at Texas, the Midwest, the Carolinas, and Georgia. But I want to make sure you walk away with, we've got growth opportunities in our core markets. Just a quick story. Earlier this year in a small town in Mississippi that I bet most people in this room has never visited, we had 6 clients in. And they each brought somebody with them who were not currently doing business with Regions. And these dozen people in this room had over $1 billion in assets. And not all of it was with us. So if we have opportunities like that in this great small town in Mississippi, we have opportunities in Birmingham, Nashville, Mobile, Little Rock, and other core markets to continue to grow. John Turner mentioned my background's in consumer, so this slide looks a lot like Ronnie's. I'm a big believer in the relationship manager model. So in this example, the wealth advisor in private wealth serves as the quarterback of the relationship. They then build the appropriate team based on the client's needs. This could include someone in trust, a portfolio manager, somebody in wealth planning, or someone from corporate banking or consumer banking to round out and meet all the needs of the customer. But we share the same passion for the client experience that both corporate and consumer do. And we've been recognized by our clients through Greenwich 3 years in a row as one of the top client experience wealth shops in the country. And our internal results last year were the best we've ever had. We take this kind of one-team approach a little bit further. And on this slide, you'll see 4 things that I think differentiate our wealth shop. And the first is one team, and that's broadly one team. It's what we call Regions 360. And I think the best way to illustrate how this works is through 2 quick stories. The first is a customer of Scott's comes into the branch. They're a checking-only customer. They come in to cash a check. Scott's consumer banker meets their needs, cashes the check, but over the course of the conversation learns that this customer is frustrated with their existing broker. Scott's team refers them to one of our financial advisors, and we meet that need. But through the course of additional conversations, we uncover that this original checking-only customer had over $2 million scattered through different providers. I'm happy to say now that this $2 million is with Regions. That's how Regions 360 works. Similar story in Ronnie's business. Ronnie had a client, again, his team was meeting all their needs from a traditional corporate banking standpoint. They had loans, treasury, and were using Terry's capital markets capabilities. But they had never moved over their $250 million investment account. They just felt a bank couldn't do that. They had it at a non-bank provider. Working with Ronnie's team and our team's expertise, late last year, we were able to bring that $250 million to Regions. And again, I think we have a much deeper relationship with that client. Second thing that I think differentiates us is our lower entry point. To be a client in private wealth, you have to have $500,000 with Regions. We think that makes sense for the core markets that we operate in. We also think it gives us an opportunity with emerging wealth in some of the growth markets that we serve. This is working for us. If you look versus the peers that we're tracking, we're growing third fastest amongst peers. The other thing I'll point out that although our minimum is $500,000, the average account is approaching $1.3 million. The other strength for us is best thinking. And what I mean by that is we've put in place a consistent investment process and methodology that improves results and the experience for the client, but it also reduces risk for us. I simply mean that if a client with similar goals and similar risk tolerance in Indianapolis will have a similar portfolio to that with a customer in Miami. And then last but certainly not least, diversity. Let me share with you a couple of facts. According to Pew Research, 9 out of 10 women are expected to be the sole financial decision maker at some point in their lives. And furthermore, women are expected to inherit roughly 70% of the wealth that's going to be transferred in the next 2 generations. And so over the last 3 years, we wanted to position our team to more reflect what our customers are and what we'd like them to be. I'm also happy to report that not only are we attracting a more diverse workforce, they're very talented. We measure top performers as our top 10%, and more than half of those are diverse leaders and bankers. As you can see from this slide, we offer a wide range of solutions for our clients. To the far left is our financial advisors. You can see that's growing almost 20% last year. Our high net worth space, you may be asking yourself in the high net worth space, if we have a lower entry point, how are we making money doing it? We benchmark with a third party, and you can see that our operating margin is in the top quartile versus peers. We do that, one, is we're not a low-cost provider. We think we provide good value, and we ask for that for our clients. And second, we have a larger gearing ratio with our advisors than do many of our peers. And then if you look from an institutional standpoint, we have some things that make us unique. We're the nation's largest funeral trust. We have the 7th largest corporate trust group. And we also have a natural resources and real estate group, which actually started with some of our institutional customers requesting more diversification. We manage land for trust, institutions, and individuals, and we think that's a really valuable service for a bank to offer. We've been doing it for over 60 years. This group devotes itself to managing land assets, farmland, properties, or timberland. It's a group I really like. These folks, while we're sitting here wearing suits and ties, they're wearing jeans and boots out in the outdoors, really getting to understand our clients. And this could be something as simple as helping a family who had their grandfather's farm passed down and we manage it for the grandchildren. Or it could be something as simple as talking with a private wealth prospect about their hunting land. Again, I think it's a real differentiator for us, and it's something we have some size in. We manage over 200,000 acres of farmland, 1 million acres of timberland, and 3 million acres of mineral rights. Let's move to the technology side. John Owen mentioned this. I'm happy to report we had a very successful conversion with our Regions Wealth platform in late 2017. We converted 12 systems onto one to SEI's wealth platform. It was an improvement for the associate experience. It was an improvement for our client experience. It reduced our risk, and it saved us money in the process. Something else we put in place in 2018 is what we call R-Track. It's simply an account aggregator. We think that this will allow us to better understand our clients' financial plans. It'll also help us understand all the assets that the clients might not have at Regions. It's a cool tool where they can take a look at it either in a hard copy of a report or on their phone to see where all their assets are located and making sure that they're moving forward to hit their financial plans. A couple of things we're working on in this next strategic plan. We are working on an enhanced customer relationship management solution across wealth. And as soon as we have this out for wealth, I believe we'll be doing it in mortgage as well. Again, think it'll be more efficient and allow our advisors to spend more time with their clients. And the other one on the left is, you probably hear it as robo-advice. This is something we're looking to put in place over the next couple of years. As you see, Scott Peters' team has attracted more younger clients, so we think that this will help their wealth needs there. And to hit again, we'll be hiring wealth bankers in Atlanta, Orlando, and Houston. We got a little head start in Orlando and already have some good results. Again, through our one team Regions 360 approach, we think it makes sense to do this as a team. And I really look forward to this being successful and John, us picking some additional markets to move to in the near future. So to close, for us to drive consistent, sustainable, long-term performance, we're going to do these three things. Leverage the uniqueness of our business model, utilize partnerships, and focus on execution. And when we do this, we'll deliver 4 to 6% growth in non-interest revenue each of the years of the 3-year plan, and we'll improve the efficiency ratio by another 300 basis points, which will be roughly 700 basis points over the last 6 years.